Whenever it's the economy, bond and FX markets' eyes are all fixed on the upcoming Reserve Bank of India policy meeting begins today. The market is split down the middle on whether Reserve Bank will cut on October 1st or pause. But maybe it'll pause and hint space for another cut. That's the other expectation. How will bond yields behave in each of these cases? Separately, the rupee has had a rough start last week, but steadied later in the week, despite dollar strengthening last week, apparently due to Reserve Bank support. Today, however, the dollar is a bit weaker. The rupee has been the worst performing currency in Asia, but how will it perform going forward? For all these issues on markets, I'm joined by Kamakshya Trivedi, Chief Foreign Exchange and Emerging Market Strategist at Goldman Sachs. Kamakshya, good morning, and thank you very much indeed for finding time for us. I'll start with the Reserve Bank. Street deeply divided. What are you expecting?
First of all, good morning, and thank you for having me on the show again, Latha. It's a pleasure to be back here discussing these issues with you. Look, we are expecting a dovish hold, so, right down the middle of that group. I think there is certainly scope for the RBI to cut interest rates. We think, one more cut is likely, certainly in this cycle. But we think having delivered the rate cuts so far, they might wait to see the impact of that before going on to cut later in the year. That said, would it be a huge shock if they moved earlier? I don't think so. I think inflation looks pretty benign, pretty much in line with target, and we've certainly seen some, shocks to, from the external environment on the trade front, on other policy fronts. And so I think, if they feel that they need to support the economy a bit more, there may be a scope to move faster. But I think at the end of the day, policy easing is likely, policy easing is coming. It's really a question of when rather than if.
Yes, but, from the market you are trading, it hasn't been such a big advantage. The June policy delivered 50 basis rate cut and the promise of 100 basis CRR cut. But from early June, when the 10-year was about 6.2, it actually shot up to 6.6 after the June policy. Of course, it's come back to 6.5 now. So anything that bond markets are expecting, will they even breathe the word OMO purchases or something like that?
Yeah, I think you're absolutely right. But I mean, again, one has to look at this in the global context, right? Which is, it's not just India's long-end bonds that have sold off and seen yields rise. There has been a global trend towards steepening curves, towards higher yields at the back end of curves. That's occurred in the UK, it's occurred in the US, it's occurred in Germany, it's occurred even in Japan, that more, place where, yields were under control for such a long time. So India is not immune to those long-end pressures that have been felt across the global dynamic. But I do think you're right that I think, some indication of the policy easing to come, I think will help. But I think also we've seen, their issuance intentions. They want to issue less at the ultra long end. That's the place that we have started to fade. So at the sort of 30-year bond level, that's the point at which, a few weeks ago, we recommended going long. We felt the backup had been a bit too much. So you're beginning to see across those long-end bonds perhaps a bit too much now, priced in terms of yields going up. We think it makes sense to start to come back down the other way. And I would expect to see that in India as well.
Are you expecting them to say something on the lowered inflation forecast? I did a poll, and the inflation forecasts have actually fallen to 2.4%. They were standing at 2.9 after the August policy. That's obviously because GST cuts and other things have happened. So is that what market will watch? If they don't lower it enough, market takes it as hawkish. If they lower it as bad as 2.4 or as low as 2.4, then the bond markets may get a verve.
I think that certainly if they lower it all the way down there, I think that's probably part of the forward signaling message that markets may take, that at such a low level of inflation, below their target level, that they might feel more comfortable easing more and soon. So that would be kind of the kind of dovish hold that I mentioned.
Okay.
We expect lower inflation as well, not quite as low as 2.5, but sort of 2.8, 2.8, that sort of level. And there's no question. I think the big picture here is inflation is benign. The GST normalization, the food price reductions, all of these have contributed to inflation not being a big constraint either to the RBI easing or to bond markets. I think what you're seeing on the bond market side is something that is more global, is something that is reflected world over. But India is different. World over, there is less demand for those ultra long end instruments. Pension funds and so on are investing less in long end instruments. Whereas India, given its demographics, given its savings profile, actually is one of these places where you can see pretty consistent inflows into long bonds. Given that inflation dynamic and given that supply dynamic, I feel if there's one place in the world you want to be, taking the other side of this bond market sell-off, I think India is one of those places.
Well, if you had taken the bet on Friday, you would be in the money now, Kamakshya. The borrowing calendar reduced the long-end bonds. And so today, there is no rally in the 10-year. 10-year yields are up, but 30-year, 15-year yields are down. But time permitting, I'll come back to it. I wanted to ask you about the rupee. Has been the worst performing currency. Would you say the bad news is all priced in, or is it still vulnerable? What's in your mind the lowest that the rupee may see in 25 and the range?
Look, I think that we have now a policy regime which is allowing greater volatility in the rupee. So it's dangerous to say that this is a kind of line in the sand, that they won't let it go beyond 88, or they won't let it go beyond 89, or they won't let it go beyond 90. I think that, at some level, I think this is a healthier way to manage the currency volatility. And I think I support the policymakers for doing that. However, when you look at our own valuation metrics, it is true that the rupee is now undervalued, quite meaningfully, even on a broad trade-weighted basis. And when you look at prior periods of similar undervaluation, 3 prior periods included COVID, it included the taper tantrum in 2013, and it included the post-GFC era, sort of 2008. Relative to those periods, I think the macro balances are in much better shape.
Absolutely.
So that answers your question. Is a lot of bad news priced in? Absolutely. There's a lot of bad news priced in. And sentiment around the rupee and India has also shifted very negatively. At the start of the year, India was kind of, the geopolitical sweet spot. Now it's sort of at the receiving end of a lot of external headwinds. So I think that, in a sort of versus the dollar, sure, can it go instead of 88 and change, can it go to 89? Sure. But I think from now on, we are going to underperform the forward. So I think that a lot of bad news is now reflected in the rupee.
Okay. Here, covering all the markets that you cover, Kamakshya, what might tempt foreign funds to be back? I mean, valuations at a nifty level have also fallen compared to the long period average. Somewhat. I mean, it can still fall further, but it's more reasonable now, and the rupee is definitely undervalued, as you say. When will that sweet spot come when they think that, both are great to enter?
Right. I think that, from the foreign investor perspective, and particularly from the equity market, you're right that it has been a laggard within the EM landscape, particularly this year. The underperformance of Indian equities relative to what the overall index has done is at a kind of multi-year wide. That said, we are coming off a number of years of very strong performance. So a time correction where Indian equities essentially have been flat year to date is the best way you can correct some of that overvaluation. And I think at the same time, you're seeing some better performance in both underallocated and undervalued markets like China. So you're seeing a little bit of that rotation going on at a global emerging market level. I don't see that necessarily stopping anytime soon. I think, the best, chance here, or the best sort of, forward outlook here is a period of stability. I think that you won't see perhaps the rupee depreciate as quickly as it has done. My expectation is by the end of the year, we are between 87 and 88. So a little bit stronger than here, not a huge amount stronger. But by the end of, middle of next year, end of next year, we are back closer to 86 type levels on the INR. So I think that there is a positive story here. The positive story is India's growth is still robust, the macro balances are robust, and inflation is low and benign. That's the best possible macro circumstances you can have. Now, you need to see the credit cycle get going. You need to see the earnings cycle get going. And you need to see foreign investors gain some confidence that Indian equities are no longer as overvalued as they were. I think the GST rationalization might add a bit of momentum as well. So I think one has to be patient here, but a lot of bad news is now in the price.
I have just a minute more, Kamaksha, but I just want to ask you, since you look at Asia as a whole, the disinflation or the demand destruction, even say Indonesia, Malaysia, Thailand, is fairly serious. So do you think we will surprise on the downside in inflation in FY27 as well, or rather calendar 26?
I think inflation looks like it is going to be on the low side across Asia. I think that, we expect pretty benign inflation metrics throughout. And it's not just the demand side. I think it's also the supply side. If you look at energy prices, which is one of the big sources of inflation in Asia, they have stayed range bound this year, and we expect further downside in energy prices as we go into next year. And so I think that's going to be an additional factor that keeps disinflation going in Asia for the medium term.
Okay, that's why what dealers tell me is that they're not looking at the average FY26 that Reserve Bank will forecast, but what do they say for year-ahead inflation? They had a 4.9, and the market is apparently watching that very closely. Well, we'll continue this discussion when the Reserve Bank has spoken its mind. Thank you very much for sparing time for us, Kamaksha. Well, that's a very encouraging word coming on the rupee from Kamakshya, that the bad news is priced in, and at some point, the foreign investor will find it attractive. It's just around the corner, hopefully. Wrap up on Bazaar Chartas is coming.